Today is Monday, October 14th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the finances this morning, Alan. Banks here in the U.S. are closed today due to the Columbus Day holiday, but what are the technicals saying about the stock indexes, currencies, and interest rate futures markets?
Okay, as far as the technicals in the stock index, today we have new record highs in the S&P and also in the Dow. So the rule of thumb is that anytime a market can trade to a new record high, suggests that there will be follow-through strength. And of course, we're seeing that already this morning. So at least in the short term, I think we can see some additional price gains, not just for the S&P and the Dow, but I think the other indices as well, although the S&P and Dow will probably will lead the way higher. As far as the currency markets, the dollar index advanced above a major downtrend line earlier this month, and there have been substantial follow-through gains. Also, we've seen major support levels taken out for the euro currency, the pound, and the yen, with the yen declining to its lowest level since July 31st. So the technicals remain supportive to the dollar, bearish for the euro currency, the pound, and the yen. Even the fundamentals seem to be pointing to those similar trends, with the Fed possibly slower to ease accommodation, while the ECB and Bank of England will be more aggressively cutting rates. So for a variety of reasons, technically and fundamentally, the dollar should continue to advance. The euro should probably continue to decline, the pound lower, and also the yen lower.
And Alan, what other reports will traders be watching closely this week?
So Tuesday, we'll have the October Empire State Manufacturing Index. That's expected to be 0. Thursday's September retail sales report anticipated to show a 0.3% increase. And then Friday, we'll have September housing starts on an annualized basis, guessed at 1.4 million.
Shifting to the soft markets, Mark Bowman, what is the outlook for cocoa this week?
All right, well, so we've seen some rain come into West Africa. Last week, they had heavy rains. We had reports of damaged roads that slowed the delivery of beans to port. It also slowed the harvest and hampers the drying of beans. They need dry weather sunny weather to aid the drying. And there's also concerns about disease problems. So this is supporting the market this week. We have a little more showers and thunderstorms forecast for basically the West Africa in general, Ivory Coast, all the way to Cameroon and Nigeria. We had some over the weekend, and we've got more expected over the next week to 10 days. And this will affect all areas. And the frequency could decrease somewhat next week. They really could use some dry weather at this point. So this is probably going to support the market the next week or so until we start to see some sunny weather emerge. Now, the arrivals last week were up from the first week, and so the rainfall didn't seem to affect that too much, at least yet. Total arrivals last week, 87,000 tons, up from 13,000 the previous week, and ahead of a year ago's 64,000. The marketing year began on October 1st, and cumulative arrivals since then have reached 100,000 tons, which is down a bit from 115,000 a year ago.
Mark, at the end of last week, analysts were measuring the damage that recent weather events had on the cotton crops here in the U.S. What did the USDA report say about the cotton market?
Okay, well, they did lower production, and that problem especially from Hurricane Helene seemed to bear some of that out. But they also lowered exports. More on that in a minute. They lowered exports more than they lowered production, so it really actually increased the ending stocks forecast. They took average yield down to 789 pounds per acre from 807 last month. Production was 14.2 million bales from 14.51 million. But they lowered exports to 11.5 million bales from 11.8 million last month. The export sales this season have been dismal. Weekly export sales cumulative since the marketing year began on August 1st are the lowest since 2015-2016. And prior to the revision on Friday, they had only reached 46% of the USDA forecast versus a 5-year average of 60%. Lowering the export sale amount forecast this month actually changes the percentage to 48%. So there's not much improvement there. And now we've got ending stocks at 4.1 million bales versus 4 million last month and 3.98 million expected, putting the stocks usage ratio at 31% from 29% last month. But this is down from 32% in the August report. The 5-year average is 20 to 32%, so we're up in the upper end of the 5-year average, but the 10-year range is 15 to 43%, so we're right in the middle of that. The major concern for U.S. exporters is China. Their production was revised up this month to 28.2 million bales from 27.8 million last month, and their imports were lowered to 9 million from 9.5 million last month. They've only committed to 476,000 bales of U.S. cotton this year versus a range of 1.5 to 3.2 million for this point in the last 7 years. And it's the lowest start since 2015-16. And this trend of higher production for China and lower imports does not offer much hope of an improvement at this point.
Okay, we'll see what happens there. Mark Soderberg, following Friday's USDA reports, do you have a lean on where U.S. corn and soybean production will finish?
Yeah, Kurt, after raising corn production 17 million bushels this past Friday to 15,203,000,000, the USDA has now raised production in the August, September, and October reports. That's only happened 7 times since 1990. The previous 6 times, final production was above the October forecast, with 2 times obviously being below the October estimate. So historically, I'd say that we have a 66% probability that final production will be above this 15.2 billion bushel figure. And with finishing weather looking quite favorable, with really no powerful storms in the outlook, I think that only strengthens the argument that final production will be above this Friday estimate. And beans, a little bit of a different story here. There's only been 3 times where we've seen this pattern happen since 1990, that where the USDA actually raised production in August, turn around and lowering it in both September and in October, albeit this year it was only a total of 7 million bushels. But in the 3 previous times that this has happened, the final production ended up below that October forecast and by an average of 80 million bushels. So I don't think it will be a significant cuts this year, but I would certainly lean towards this year's production being a little bit below this 4.582 billion bushel figure. Still a record production and yield, but probably a little bit lower than what they said on Friday.
And Mark, what other factors will be driving ag prices this week?
Well, with finishing weather here in the U.S. looking quite favorable for harvest, I think weather eyes will certainly shift, if they haven't already, down to South America, where rains will finally start to fall across some of these drier areas of central Brazil. To date, plantings have been slow in the soybeans at just over 8%, about half of the normal pace at 17%. But with monsoonal rains starting to arrive here, if they already have in some areas, a little bit about 2 weeks later than normal, I think it's not really going to have much of an impact on yields just yet. So we'll be watching weather down there. We also have some key usage numbers, NOPA crush tomorrow, and we'll also be watching the pace of Chinese imports. They've been off to a really slow start, and they're shifting over to buying U.S. beans to start to pick up here the last couple of months, but we're still behind a year ago and well behind where we were 2 years ago. We have an election coming up 3 weeks from tomorrow, 2 wars on the outlook, so those could certainly impact commodity valuation expectations moving forward. And of course, we'll be watching speculative traders. The money managers have been net buyers in the agricultural space now 8 consecutive weeks and 11 of the last 12. In the 10 markets I follow, these CFTC data, they've now flipped their position around to being net long for the first time in 13 months. Still short a little on the corn, short a little on beans and on wheat, but long in the soybean products, long in the livestock markets. So we'll see if the speculative buying continues or if it's starting to run its course and starting to tail off a little bit here today. I think as that might be of drying up a little bit, and with the improved weather now in South America.
Plenty to watch. Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.